Good afternoon, Rich Boss for Critical Point. It is June 27, Friday. All right, this is an update on some of the news flying around. Some of it's also just long-term social discussions and things have been ongoing. But I want to begin with first some of the economic type data, or at least what economists and market participants like to follow. So this is put out by Fred, the St. Louis Federal Reserve unit that has their own little database called Fred. And this is the consumer sentiment put out by University of Michigan as of May. And May was unchanged at 52.2 compared to April. And that came out today. All right, business cycle modeling wise. This is a kitchen business cycle top. What's the definition of a kitchen business cycle? It is a pattern of about every 3 to 4 years. My definition is shorter than kitchen. Kitchen might be 4 going towards 5 years, but I think I got something better, okay? Better timing, all right? The kitchen business cycle is basically a throttle up, throttle down process of today's economy, and it spills over into markets and very specific data, even individual businesses, that we can see this throttle up, throttle down every few years. I think it's starting to be manipulated by capitalism that's going overboard, that we're making sure we don't have normal declines in business, especially profitability, that should occur about every other year. We're just wiping those out. And we're partially doing that because we're just raising prices to the consumer when we're not making enough money. We just simply raise the price. So businesses are creating as much inflation as the printed money of the Federal Reserve. In fact, in my opinion, over the long run, they've created more. Okay. So this is a negative thing that's happening. But the business cycle is still there. It's just not showing up the way I would like to see it. It's kind of being manipulated, at least for consumer sentiment. We find that that's the top. It came down into the related bottom in 2022. It's understandable why people turned pessimistic or less optimistic because of the inflation in 2022 and the rising interest rates. They were concerned the country was not doing well or even on the right track. Then we get an improvement of consumer sentiment into 2024, and this is the business cycle visually of the kitchen business cycle. Down, then up. That's when you're looking at tops. When you flip it on its head and look for bottoms, then this is the bottom in 2022, the top, and so it's an upside down U or V. Sometimes the patterns get quite complicated. Sometimes you can barely even notice them. The data is going sideways. Okay, so it doesn't work to 100% accuracy or usefulness, so efficiency, okay? At any rate, what the model is showing is we're due, the U.S. that is, for consumer sentiment to bottom now until October. And October seems extremely late to me. I think it would be very, very low probability to bottom that late. But normally we run into consumer confidence and sentiment problems about October, about every year, about the same time. So maybe it'll work again. I'm assuming there's a chance this has gone to bottom now all the way out to October, but likely sooner rather than later. I think maybe even just the next couple of months, it might go a little bit lower to sideways before actually moving up, but I don't know for sure, okay? And I'd be concerned that if it blips the next 2 months, blips to the upside, it might just blip right back down on us as well. But ideally, it bottoms this year. This is the latest year for consumer sentiment to bottom for that kitchen business cycle. This suggests in 26, people will be a bit happier. We don't know if they'll be only just slightly so. Maybe it's just less pessimistic, okay? But they could turn out to be outright happy, okay, and better sentiment here of the future of the country in 2026, and that may last into 27, and the model is currently saying it won't last any longer than 27 for sentiment, okay? Now, the problem with sentiment is it can stay up longer as the stock market gives up and starts coming down and economy starts deteriorating. Consumers are slow picking up on that, so when it tops out 27, the latest, it's also possible bad times are already starting before then, which means we may only have a run up for good times in 26 to early 27 for the economy, okay? At any rate, that's the consumer sentiment. Now we want to go on to a list of other things. And those other things are we're going to look at real gross domestic product, GDP, okay? And we just got a report on that this week as well. And as of the first quarter, GDP was down to 1.99%. I'm now scrambling for my notes here. that I made yesterday when studying GDP with this modeling. But what we have to watch out for is GDP is in a business cycle. So this is the kitchen business cycle plus major long-term, once a decade type bottom, recession problems, and turned into a buy signal for the stock market. Moves up, comes down, and this is one of those kitchen business cycles, and then it moves up, rolls over again, coming down, and looks like GDP really has a little more downside potential. We got it at 1.99, and I'm concerned it can go to 1.4, and it starts drifting below that. People are going to get nervous it's on its way to zero, and if it goes to minus, they're going to get nervous over a recession. Currently, we're not forecasting a recession, not any longer anyways. And so my guess is it's coming down somewhat, all right? The Fed Reserve is holding off and raising interest rates to help reduce the down pace of this GDP because they're scared of rising inflation. And inflation could have bottomed in April for the kitchen business cycle, and inflation now can go higher into next year, and mostly from tariffs, but also from the possibility businesses want to rip off the consumer because they just want to make more and more profits, okay? Or they want to protect themselves. Even if they see a business slump, they may raise that just to make more money while business actually deteriorates, okay? Which is shooting themselves in the foot because it should, in theory, for a free market system, lower the demand for their products and services. All right, the next thing we want to look at is that this GDP also could take all year long to bottom, but it probably is bottoming this year. GDP should be in an up move next year. So we then have to look at this, I'll have to look this up, and I'll put this in some of our other updates here for members and this and that. But taking out that high could be a clue it's finally moving up for the kitchen business cycle. Taking that high out would be all the evidence you need for a kitchen up business cycle move, but also evidence we're back on track for the decade boom bust cycle. When the juggler business cycle shows the economy grows for 7 to 12 years, then we have 1 to 3 years with a recession, and we are due to get back online and hopefully keep this economy going higher into 2027 to 2030, when we're going to get a once a decade sell signal, and the stock market is probably dropping 35 to 65%. All right, next up, we want to go to just some news that I'm looking at for long-term culture, civilization, society, lifestyle, or types of patterns, okay? And, you know, the American people, we're in a soft civil war, and we're mentally, physically ill. We're not the brightest right now. We're losing our mojo, okay? And we worship capitalism and money and working hard far too much. We should be far more proud of working smarter and less than working hard. And yes, we do need some equal rights, not only amongst all peoples, but also genders, okay? All right, any rate, stock bulls, looking to push the market. And today, the market did punch through to a record new high in the S&P 500. Now we'll have to see if it closes that way, looking like it can. And then there's just more on Trump's tariffs and how things are going. This is someone else's work here that I need to evaluate myself, but it is something to think about here with the dollar and the euro and what's going on in the world with the dollar. Then this is The Economist, and this gets into generational cycles when we're in a crisis phase now. And I call it a winter death phase that dates back to the birth of this country, and it's time for rebirth. And hopefully next 20, 30 years, we'll get our act together. That's going to save us from a lost century when China should now be the winner of the world, as well as Asia, China, okay? And Europe and the rest of the world should be backing off, but U.S. can back off the most and get hurt the most here relative to its own version of those kind of cycles that we look at. All right, and then this is U.S. monthly solar generation. Fantastic. I'm a solar generation fan, alternative energy fan, invested in it myself and put money into it. And this is a very interesting statement about immigrants and the big major companies here. And here we're throwing immigrants out of our country. And then here's hard data, relative agnostic, staff data, definitive. Jobs are not easy to find, and I've been talking to some young people more on the financial side with MBAs and bachelors, and they are really discouraged right now of trying to find anything, and that's just a blank screen. Okay, and then this is another little statement I found on the internet that will go for some of this culture, civilization, and this is about Eisenhower, who was, a Republican, but boy, he had the more I read about Eisenhower, the more I realize had his head on straight, and he did have some similar things back to Truman and FDR and trying to run the country a better way. And another little comment to how we deal and work with ourselves and people. And here's another one as well. Okay. And then this is the final one here. So at any rate, that's the wrap up here where we're going. And here's what any look at all consumers are going to bottom out this year, not money and financially wise. It's just simply how they're thinking and talking. The interesting thing is they tend in the stock market to do something different than what they're actually talking about, and they lead or lag relative to the stock market and don't have the best timing. But nonetheless, it is still something to consider for stock market and the economy. And now we also have to consider GDP, that it is eroding under Trump. And I'd like to point out by my calculations, which may be wrong, but I read that someone was blaming Trump for his minus 0.5% reduction in the first quarter of 2025 of the U.S. economy. So I just did some math and came up with a calculation that we lost $160 billion under the Trump economy. Have a great weekend. Past results not necessarily indicative of future results. If you're not a subscriber, go to criticalpointpod.com. Become a member here. Got 3 different subscriptions. One of them is just a combination. The other one is stock market, Bitcoin, gold, oil, economy, interest rates, bond market, those kind of things. And then the other one is just grains. I call it Commodity by Rich. Whereas the stock market stuff is called Stock Index Magi. Thank you very much, and pass the word on to others. Thank you.